All right, let's get right into it. I know, if you're looking at the crypto charts right now, it probably feels like watching paint dry. But trust me, under that dead calm surface, the market is a tightly coiled spring, just waiting for the signal to absolutely explode. Just picture it. It's 4 o'clock in the morning. You're probably, 6 shots of espresso deep, just staring at the charts, and they are just flat. Stubbornly, maddeningly flat. You feel like nothing, and I mean nothing, is happening. But you know what? That feeling, it's a trap. Because right now there is immense pressure building up across the entire global financial system. We are trading in pure macro madness. And the real story isn't in the price action, it's in the headlines. So that brings us to the big question, right? Why does everything feel so completely frozen in place? Well, that sideways chop in Bitcoin, it's a mask. It's hiding a market that is collectively holding its breath for one single massive event. And the answer, honestly, is simple, but it is huge. The whole market is waiting on a potential seismic shift at the single most powerful financial institution on the planet, the U.S. Federal Reserve. This is not just another news story, my friends. This could change absolutely everything. The name you need to know is Kevin Hassett. He has just shot up to become the top pick for the next Fed chair. Now, why does that matter so much? Well, Hassett isn't just some dusty economist. He's a Trump advisor who is known to be incredibly pro-crypto and, more importantly, a huge advocate for cutting interest rates. A pivot to a Hassett-led Fed would be, monumental. And look, this isn't just some wild speculation. The market is already moving on this. The probability of a December rate cut just skyrocketed to 85%. That's the market, in real time, pricing in a future with much, much looser monetary policy. So let's boil it all down. A Fed chair who wants to cut rates, that is potential liquidity rocket fuel for the markets. You see, looser money means more cash looking for a place to go. And historically, that cash just floods into risk assets, like crypto. Okay, so let's pull back from that giant macro story for a second and see how it's playing out on the ground floor. Who's actually winning and who's losing on today's battlefield? Like I said, the big dogs are sleeping. Bitcoin is just stuck in this super tight range, hovering right around $87,000, basically flat. Ethereum is actually showing a little more fight, holding strong above $2,900, but it's this exact stability that's masking the chaos brewing underneath. Now, this is where the action is. The money is chasing very specific stories. Moned, pumping over 18% after its mainnet went live. PiCoin is popping on hype for a big announcement. And get this, XRP is now leading the pack in altcoin ETF flows, even flipping Solana. But on the flip side, if you don't have a story, like Aster, you're just bleeding out. But while retail is chasing these pumps, you gotta look at this number. The institutional money, they aren't budging. They are holding the line. Over $207 million in net ETF inflows in just the last 24 hours. See, the big money isn't spooked. They're just waiting. So where's the smart money actually going? It's concentrating in two key areas. First up, stablecoins. You've got the new KlarnaUSD, and BlackRock's BUIDL fund just swelled to $2.3 billion. That sector is on fire. Second, prediction markets. Robinhood is expanding, and Polymarket just got the green light from the CFTC to operate in the US. That's a huge shot of legitimacy. This whole situation, though, creates a really dangerous spot for a lot of other coins. Just look at this. Bitcoin dominance is way up at 58%. That means Bitcoin is basically sucking all the oxygen and all the capital out of the room. If you're a small cap altcoin with no clear narrative, no ETF buzz, you are in the danger zone. All right, let's zoom out from the minute-by-minute chaos and take a look at the bigger picture. Where exactly does this incredibly tense moment fit into the grand scheme of the market cycle? Okay, this is fascinating. And this isn't from some random analyst on Twitter. Research from a heavyweight, Fidelity Digital Assets, suggests we might be entering what they call the acceleration phase of the bull market. That adds some serious institutional weight to this idea that a really big move is just around the corner. So what in the world is the acceleration phase? Well, it's not a slow, steady climb up the mountain. History tells us it's a period of insane volatility that ends with one last dramatic and usually explosive price surge that caps off the entire cycle. And it's not just about market cycles. There's another massive trend happening under the surface: institutionalization. I mean, look at this chart. The number of public companies holding Bitcoin on their balance sheets went from basically 1 to over 75 in a blink of an eye. This is a fundamental shift in how the corporate world sees Bitcoin. So, with all this tension building, what should you actually be paying attention to? I'm going to boil it all down for you, a simple 3-point dashboard you can use to keep your finger on the pulse of this market right now. Here it is, 3 numbers that tell the whole story. Number 1, the Fear and Greed Index is at 15, extreme fear. Retail is terrified. Number 2, net ETF flow is still positive and steady. Institutions are confident. Number 3, Bitcoin dominance is high, which is squeezing altcoins. You see the picture? Retail fear, institutional patience, and a flight to safety inside crypto itself.
And all of this leads to one crucial mindset you have to navigate this. Flow is king. Fear is at an absolute peak. So the key is to stop trading with emotion. You have to trade with the data. You have to trade with the order flow.
Which really leaves us with one last big question. In a market that is paralyzed by fear on one hand, but primed for a massive injection of liquidity on the other, what are you going to do? Are you going to follow the fearful herd, or are you going to follow the data?